Hey, good morning. You want to trade some Forex? Let's go! Bum, bum, bum. Hey, welcome to the Forex.Today YouTube channel. Today is a Monday. What is it, the 2-2? Yeah, April 2-2, 2019. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never, ever, ever risk money you cannot afford to lose. So, hey, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. If you have not yet joined our family of Forex traders, then please visit TradersWay.com. Open up a demo account. When you're in your back office, download MT4. Come back to this video, and you'll see right below the video in the description below, there's a link that says download all my chart templates for free. So your charts will look like my charts. We'll have the same tools. And if you come to these webinars every day, over time, we'll have the same language and communication, and pretty soon we'll have an understanding of each other, and you'll have an understanding of trading. And maybe, just maybe, you'll become a better trader. But that is the raison d'etre. I want to help you become a really good Forex trader. That means you need to be patient and disciplined. It's not a get-rich-quick scheme. It's a professional business. And that's what I'm trying to teach you. Technicals and fundamentals. So please get involved, ask questions, leave comments and likes, ask questions, leave comments and likes, leave questions, ask questions. And then, of course, everybody in this chat room are a part of a community of like-minded people, of successful people that want to become a success in Forex as well. So please treat each other with respect. Without any further ado, let's go here. Yo, yo, yo. I look different today. Is it the hair? Nah. No. I think so. All right, so what do you want to do today? Let's go through the normal stuff, the gold and oil, dollar pairs, yen pairs. I did do it, Jim. I guess Ryan didn't upload it. He usually does, but I did do it. Something in my ear. $1,000 for a Q-tip. Anyways. Gold and oil. Am I on the right place? Yeah, let's start with gold. Okay, that's where you are for bears. That's where a bear would sell. Let's do that with red. Let's do a better red than that. Let's do this red. And let's fatten this up a little bit. Oh, I have one of these. Interesting. How do I fatten up the line? Oh, yeah, this one. All right, so a bear would be planning this. There's a problem with that, though. It's too high up. Oh, man, that's driving me nuts. Too high up, really, because that's a weekly R1. It's not that good. I mean, that's not really what we want. So maybe, just maybe, instead of playing that as resistance, let's redo it. We say, that's too high up. Can we count this as resistance? And we'll see, oh, yeah, there's something there. And then, come on, mouse. And then, yeah, there's something way out here. So, looks like the more likely plan would be this. down, 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 up, up, sell. Okay, that would be the bearish plan. Now, the aggressive version is to consider doing it now. You see how we're on the central here? Okay. Elias says the markets are quiet today. Well, not all markets are open today. Okay. So let me put this small again. There's another level of resistance right here. Okay. If you're aggressive, right? Out of the swing trading group, that's sort of a plan A. Man, for some reason, as soon as I click the start webinar thing, I get an itchy ear. Maybe that means money's coming, huh? All right, so let's flip this and say, what if you're not a bear but a bull? Okay. Then let's look at it this way. This is the bull zone here. We know that already. Okay? Which means when the market opened on Sunday, you had an opportunity to buy. And your plan is sort of like this. Right? Let's clear it. It's kind of what you're thinking if you're a bull in gold. Okay. And let's do oil. It's a little bit of pro news today, news that's pro oil, or let's say oil prices going up. That is, the United States is going to start punishing countries that are buying oil from Iran. Okay? So, less oil, basically. They're trying to take that off the market. So let's take a look at where we are now. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 up. This was a quick one. Down, down, buy. Up, 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 up. Hit the target. Remember when we hit this target like 2 weeks ago, I said I have no idea where it's likely to go. It definitely can come down. If it comes down, how will that affect CAD? Remember all of that? That occurred way back here, which means we haven't wasted any time for the last 2 weeks. Even though it ended up going up, that's irrelevant. And you're going to have to learn that one day. You might not believe me now. But on the long run, that's irrelevant. There was a buy a dip if you're using price action here. Okay. Yeah, if you're a bull, okay. Back into the resistance. Once again, it's just resistance. What does it mean? It means you're supposed to stop trading. And if you're a bull, to take profit. Now we're up here, still irrelevant. So it comes down to, what are you going to do the rest of the week? What are you going to do the rest of the month? You'll see, because we move sideways for 2 weeks, even the weekly pivots are useless. And that's the whole point. That means this is all risk. This is all risk. It's all risk. Okay? So in the long run, if you're a bear on oil, you're going to look for something like that. And if you're a bull on oil, you're going to look for something like this. Nothing good can happen up here under these circumstances. Okay? Sure, Peter. Hey, isn't it also Passover? I think it's Passover too, right? It's not just Easter. No one ever says, hey man, whoop whoop, Happy Passover. I don't know if you can have a happy Passover. I don't know much, but anyways. Well, that might be just as May is seasonally weaker for oil. Well, what happens is we get closer and closer to June, and June is peak oil, right? Cool. So, patience and discipline. If you are now a bear, let's say you call this a top, you call this a bottom, you call this big move here a break. If you're a seller now of euro dollar, this is the best price you can get. This is your first opportunity if you want. To say that with pretty colors, it's going to look like this for you. Okay? If you're a burr. All right. So what if you're not a burr? All right, well then let's talk about that. If you're not a burr, this is the price here that you want. Notice when the market opened, you had that opportunity. That's why you need to trade on Sundays. Yes, I was at my charts Sunday at 5 p.m., even though dressed in my church clothes, dinner getting ready to be served. Still at my charts. So anyways, a bull is going to try to take it up here. And the major challenge a bull is going to need to be worried about, of course, is this one in here, right? So bulls have already had their opportunity. Bears are waiting it out. I don't know what everyone else does. Not all banks are closed, Peter, but, okay, but many banks are closed today, and that is additional risk, Peter. So if you don't like it, you absolutely can walk away from trading today. Okay, absolutely. But the United States is open. So it's your call, right? But definitely you could say there's risk here, and I don't want to take that risk. Alex, my favorite move is finding support and getting a double bottom with a higher high, or identifying resistance. So let's say here, right? And getting a double top with a lower low. That is my absolute favorite. And what I do is then I drag a line across like this, or I drag a line across like this, and I look for Pachow or Pachow. Okay, absolute favorite. But this has to be hardcore resistance, hardcore. Like if it's not resistance, then it's nothing, right? Or sup, or hardcore sup. Okay, hardcore. If you don't have the support or resistance, everything is irrelevant. Okay. I think if you just did that trading pattern 100 times in a row, two things are going to happen. You're going to get really, 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 really good at not just trading reversal patterns, but anticipating where markets are going to reverse, and then be prepared for the reversal before the reversal has occurred. Therefore, when the reversal has actually taken place, you're in. Okay? But also, because you're setting up things hours and days in advance, you will also become very, 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 very disciplined. Okay? And those two things are going to be really good. And then what you should do after doing that 100 times, add another pattern to your repertoire that you look for. And now you trade only 1, 2, 3 patterns. And whatever other pattern you have added, and you do that 100 times, and you get really, really, really good at that second pattern. And you're still hardcore disciplined. So then after you've done that 100 times, you add a third one. And you remained hardcore disciplined, but now you have 3 patterns that you get really, 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 really good at anticipating, identifying, and trading. And at that point, you probably be one of the best traders in the world. Cash, I'd say, yeah, I mean, honestly, it's all the same. What you'll find is it'll happen on the small time frames and build up to a bigger one. But generally, whatever you're trading cash, it's going to work the same. So 15-minute chart, 1-hour chart, 4-hour chart, let's say. When you drop into like scalping scenarios, it doesn't quite, I mean, it works the same way, but the thing is you should all see the way I scalp is like, let's say I'm looking at this on an hourly chart and it comes up here and then I see this, and then I see this. Okay. So what do I do now? Well, I know my trade plan is to sell somewhere in here between the triple top and this midpoint, right? So now I drop out of the 1 hour and I go to the 1 minute. And I already know what I want to do and I know roughly the price and I'm going to take the next turn down. That's it. So that's how I do the 1 minute. So I wouldn't drop into 1 minute and then look for this same pattern on a 1 minute. I wouldn't do it that way. I'd trade this on a 1 minute, meaning I know I'm going to sell the next turn right around here, and then I look at the 1 minute. It might look like this. The 1 minute might be like this, and then pa-chow. Okay, this translating into being here. Okay. If you want to short EU on a monthly pivot and a weekly M3, would it not look like bullish on the... Yeah, probably. Yeah, absolutely. That's why you got to change your time frame. Okay. So when you're here, it's still going to be, let's say, it'll be this way. And then let me get a blue. And then this one's going to be like this, right? That's why you change time frame. So this is just to identify in this time frame. Okay. And you look at the pattern, you say, oh, this is reversed. So my strategy is to sell somewhere around here. Okay. Done. I'm done at that point, okay? Okay, to Smart Robin. Done at that point. Strategy's done. I'm going to sell something in here. I don't need the moving average analysis anymore. Okay, done. Then I clear that up and I drop into a smaller time frame. Okay. So let's say it does this, and then it does this. Okay. So now I can look for reversal patterns here, or let's say moving average crossovers. So if the 21 crosses below the 55 after a move like this, So you gotta go darker blue. Okay. So up in here, you can trade the 2155 cross up here. Meanwhile, someone else might look for the double top, lower low, and they're still selling the same price area that you're selling. So you might sell a moving average crossover rejection up here. Someone else might trade a reversal pattern up here. You end up getting into this roughly the same price, roughly the same time, but neither of those are really making you money. The thing that's really making you money is this, the strategy. The tactics are just entering and exiting. Okay. So what on this 1 hour chart, what it tells you is it's going to double bottom and then it's going to rise. Right? You see that? That's what the moving averages are telling us. Great. So when you get here, look for that if you're a bear. If you're a bull, you should have bought it here. You should have bought it here. You might come down, give you another chance, so you might have a third chance if you're a bull. Okay? And if you're a bull, you are going to be challenged here. Now, I don't know if bulls are going to be able to win and go up here, but they will be challenged here by bears. They will. That's where bears live. Okay? And bears might win this, and we might come down here. We don't know. So you better pick a team. If you're a bull, there it is. If you're a bear, wait for it. No, it's not, Peter. It's advanced. But most people, by most I mean almost everybody, can't do it. The best way to do that, Peter, is to have two separate accounts. One is long-term only, the other one is short-term only, and you never mix the two. You never mix the two. Right? The best way to trade long-term charts is to enter your trade, move your stop to break even, and then absolutely totally forget about it. And I mean, like, come back in a year. Right? Like, for example, let's say you got yourself into a yen long trade. I'm not saying it's the right time of the year to make that trade, but let's say you went long on a yen pair. And your analysis was long term. You bought it at a monthly pivot, or maybe use annual pivots. I don't, but whatever. You made a decision. You bought it. So right or wrong, you bought it. Move your stop to break even. Great. So your trade's up 30, 50, 60, 70 pips, whatever. And come back December 15th. What's the likelihood you got knocked out at break even, or maybe you moved it to protect 25 pips? I don't know, right? What's the likelihood you broke even? Oh, it's pretty high. Let's say 80% chance. But you can't lose money on it. What's the big deal? And every day it's open, you actually get paid interest. So your worst case scenario is you make a tiny little bit of money. Cool. But what about the other 20% of the time? At December 15th, you open up your trade. You've made interest payments 7 days a week for 7 months, but you're up 1,900 pips. And you're like, oh, snap! Right? That really helped. You're like, icing on the cake. You're like, oh my God, I didn't do jack for 7 months. I made 1,900 pips plus 200 days of earning interest. And that's the difference between working for income and working for wealth. So what if every once in a while you see these trades on your shorter term account and you're like, wow, look at that. That's another monthly entry on a different pair, let's say a different yen long. And you take that one, nurse the stop loss to break even, and just walk away again. Just walk away. Totally forget about it. The best thing you could do is your phone goes blink, blink, December 15th. You're like, oh, snap. That's right. I need to check my yen long basket, right? And you log in, and you're like, damn, I got 7,000 pips. Oh, my God. Right? And then one day you'll realize all these little pissy little trades you've been doing really ends up break even, and the big money at the end of the year is your longer term trades. And you're like, well, maybe all these little pissy little trades are really just setups for the bigger trades, and maybe I should just get bigger trades and let them run, and it becomes a big part of your portfolio. Well, that's the day you become a professional, when you realize all these 25 pip winners are just tiny little setups for the bigger picture. And then if you can get the bigger picture, you're going to get the bigger money. Yeah, maybe it's getting enough sleep. I don't know. Good, Banda. That's how you do it. Work your butt off, right? All right. So anyways. So like we're entering into the middle of the year, right? That's the interesting thing is like, is there anything interesting going on? What is the trend this year? How would you describe euro dollar over the last 3 months, right? But eventually it's going to pick a direction, right? Yeah, it is true. My walls and the ceiling is waterproof. Soundproof. Yes. I know, right? So eventually, though, this is going to break up or down. Okay. You'll have to make a decision. I have my decision. But like when this moves, when it picks a direction, so like this little thin little line, that tells us that the euro dollar is worth the same price as it was in November. And, right? And probably only 5% difference than August. Okay? So not a lot's really happened. Okay. But oh, I thought you were joking, Peter. You didn't know my walls are soundproofed? Yeah. It's a really neat process. How would I draw it? Well, I guess this is a wall. And what they do is they spray it first with a foam, and the foam is really thin and very, very tight. It almost feels like styrofoam, like egg carton, styrofoam egg carton. They spray it on, comes out so hot it almost melts the wires, right? So they spray it in there, and it's tight, okay? But foam, but not, well, in this case, like seriously, styrofoam. They spray it on, okay? And that's one layer. And then they come back the next day and they spray it on a thick layer. And this is more like, how'd you describe this? It looks fluffy. It looks like snow. Okay? And so the way the soundproof works is, we'll do blue for sound. Sound comes in, gets muffled, gets muffled in the fluffy stuff. Then it hits the hard stuff, bounces off the hard stuff, goes back through, comes up, all right? And then, of course, there's drywall on this, right? So you can't see anything. It's all sandwiched through, so most of the sound just bounces off the walls, right? So I did this in the ceiling and the other walls. So most of the sound just bounces off, right, like this. But some makes it through and hits the fluffy stuff, and then hits the hard stuff, and then goes back through the fluffy stuff, back through the drywall, and is basically gone. It's really neat stuff. Okay. Do you use leverage? Of course I use leverage, big fella, but you really don't need much in Forex. I mean, right? Those that need high leverage don't have any money. Okay? They just don't have any money. So they're likely going to fail anyways. Because why do you need large leverage? Well, you got to take your little bit of money and you want to get rich quick. Well, you've already lost. Okay, just the attitude. I don't care. I've seen very rich people have the same attitude and whatever. So you got to look at Forex trading as a professional business. Okay. And you really don't need that much. You don't need, let's say, you don't need more than 100 to 1. And even then, even then, over time, we're going to reduce that. Okay. In the United States, it's 50 to 1. And that's more than enough. If you trade futures contracts, it's 40 to 1. Okay. Okay. You don't need any more than that. You just really don't. Otherwise, you're so over leveraged. You're assuming so much risk. And let's face it, unless you've been trading for 20 years, you're just not that good. So what you'll do is you will blow up your trading account and end your career early before you even have enough experience. So like, what I did is I traded a demo account for 2 years before I opened up a real account. 2 years. Like, I didn't want to lose my money. Makes sense, right? So imagine if you traded every single day, not just traded, but like actually followed my advice. And of course, I give you speeches all the time. I've written books. I've done webinars. I've told you how to do it right. Okay, so if you're one of the 5% that actually follow the advice, you might have a shot. So you do that for 3, 4, 5 years. Let's say 5 years. You study Forex. Technically, fundamentally, psychologically, historically, whatever. And you do it the way I tell you. In 5 years, then you open a trading account. You'll be a master. A master. 95% of traders would come up against you, wouldn't even have a chance. Candy from a child. I always think of I saw a video where there's some kid in like India or something, and he's standing with a big ice cream cone, and there's monkeys all around him. I love it. And so the monkey, right, comes up, and the monkey's almost the size of the little kid. The little kid's got his ice cream. He's like, "Oh, mommy, look at the monkey. The monkey comes up, makes a fist, and just goes wham right in the kid's face. And the kid drops his ice cream cone, and the monkey goes whoop. There you go, free ice cream. That's how you do it. That's how you do it. Except, in this case, those that trade like little children will drop money on your desk, into your bank account. Send your kids to Harvard. And you'll say, Thank you, child. And yes, you are the monkey, but I wrote that in my book. You should already know that you're a cheeky little monkey. You're not an 800-pound gorilla. If you've read my book, you know all of that. So yes, you should be the cheeky little monkey. Yes. All right. So let's go through a couple of other dollar pairs. Okay. How does this look? Well, it looks more bullish than bearish. I mean, sorry, more bearish than bullish. But does it still look good? Well, so I see that as support. I see this as support. There's something going on here. Then let me change colors. Then now looking at pivots, we got one here and we got one here. That doesn't look like a place I want to sell. And like maybe, I don't know. Like I don't want to sell it here and I don't want to sell it here. And I didn't want to sell it here, but it doesn't look bullish. But you know what? If it started to do something like this, I might be interested. So long story short, I'm just, that doesn't look like easy money to me. That doesn't look like a fat little 5-year-old with ice cream, So if there's no ice cream, I'm not interested. Okay. I want low-hanging fruit. I want easy ice cream. Okay. What about this one? Let's go 4-hour. Is there a good trend? No, not really. Are we on a good monthly pivot? No. So let's decipher this. There's actually a story here. Bulls bought it here. That was super ridiculously easy. That was 3 weeks ago. You should still be long and strong, making money, getting paid every day. Okay. Later in that same week, bears sold it here. Maybe you got knocked out of break even. Maybe you're still short. I don't know. But if you did your job back then, you got paid. You're profitable. So bulls are profitable on this one. Bulls are making money. Bears are making money. Everyone else is doing something strange. Okay? So what do you want to do now? Well, if you were a ridiculously aggressive bull, you can consider buying this off of a weekly trade plan. There's nothing to say that that's wrong. It's really aggressive. I'd rather buy it above here, but you could. And if you're a bear, no. And you have to remind yourself, like, why, Wayne? Why can't you sell this here? Why can't you sell this? It looks like it's going down. Well, first of all, if you're a bear, what does your business plan say that you do? What are your rules of engagement, right? You sell high. Bears sell high. Okay? I think we can all agree with that. So then the next question is this high? Okay. If the answer is no, then what? What is it that you're doing? Making a mistake, plausibly, right? So you actually want bulls to come in, right? This is the thing I really like about trading. You actually need bulls to come in, drive it up so you can drop it. Okay? If it drops here first and then goes up, that's an inside week. It's going to go S1, R1. Okay? Let me show you that one. So let's say it does fall. I couldn't care less. You can't sell here, so why would I care? Okay? But if it went here, then we're going to go here, and then we're going to drop back down. That's an inside week, and we're stuck in the range of death. But we already knew that. We all already knew that. So you might as well have like I go back to, we do this every month, right? But for every trade over and over and over again, at the beginning of the month, you're supposed to like have a trade plan. So if you're a bull, this was obvious. If you're a bear, this was obvious. It doesn't get any more obvious than either of these things. So if you're doing something in between, you just don't know what you're doing. And maybe you made some money here, or maybe you made some money here, but then you probably lost it here, and then who knows what you're doing here. You're going to be so inconsistent that you're going to work your butt off trading over and over and over and over again, and find at the end of the year you didn't make any money. Right? You're supposed to have all these trade plans in advance. This is pretty simple. This is pretty simple. And you bought this and walked away. 3 weeks have gone by. You're like, oh, well, I'm not up very many pips. Huh. Good thing I didn't waste any time. Same thing. You're like, oh man, I almost broke even. Good thing my stop's up here, right? You're like, huh, maybe I should move my stop. It's not trending down like I thought. So now your stop's at break even. And if you're a professional bull, you're not going to lose any money. If you're a professional bear, you're not going to lose any money. One of them will make money. That's all that matters. That's all that matters. One of them's going to make money. Neither of them are going to lose. Amateurs are the ones in between. You feel me? Are you starting to see that? Where I think most retail traders that trade like full time, so I guess they're not, well, they're still retail, but they're not retail, they're not, let's say professional retail traders. They probably work 10 times harder than institutional traders and like make no money. Both. It's both live and video. You got to know strategy, but then you need practice doing tactics, right? So yeah, on Easter Sunday at 5 o'clock in the afternoon, right when a lot of people eat their meal, their holiday meal, I was doing my job. Markets opened. I'm sitting there doing my pivots. I just happen to include my my colleagues. The swing trading group was with me. Cool. I mean, it's just what you do. All right. Boom, 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 boom. I don't want to do USD. All right. Well, Chizzy, ask yourself, when does the dollar tend to go on a weakness move? Ask yourself that first. What is likely to weaken the US dollar on a let's say a fairly long-term basis? Let's say over the course of 3 to 6 months. Does that typically start in June? So just be careful. Don't start. I mean, the other way to do it is, in that case, find resistance, sell it when you're at resistance, and then move your stop. Right? But that's up to you. But yeah, I love interest. Right? So, for example, Chizzy, I think it was about, I can't remember the date now. It's been longer than 6 months. 9 months ago, I right before the big drop in the lira, I talked about high yield opportunities, right? And I said, imagine you made a trade on this and you stayed on it for a year, and I told everybody, you're earning hundreds and hundreds and hundreds of percent just on interest only. And that day I forget what it was, but anyways, if you look at how much you would have earned since then, it's like I think it's about 400%. The reason I can't remember exactly is I followed up on it a while ago, about a month ago or something. And it was about 400%, which ain't bad for, like, imagine it's a bond, right? Because once you got, yeah, and Euro try is even better. So, but imagine if you got your stop loss at break even, then it essentially is a bond, right? Turkey is paying you money to borrow your to your lira or your euro in that case or whatever. So yeah, it's fantastic. Imagine earning 400%. What's the best bond you can buy right now? Right, 5%. So wouldn't it be nice where people are like, you're at a cocktail party and you're like, they're like, hey, so what do you do? And you're like, oh, I loan out sovereign debt. And they're like, what? You say, well, there's countries around the world that are short on particular foreign currencies, and they need that to pay down their debts because they borrow money from rich countries. So I go to these poor countries, I lend them money. I lend the government money at exorbitant rates, at credit card level rates. Yeah. India is 8%. Yeah. You know, actually, but I don't know if they still do it now, but I remember, oh my God, 20 years ago, I have a lot of Indian friends. Indians are good people, right? So they make good friends. Anyways, India would call up my friends in the United States that had lots of money, and they're like, move the money to India, right? We'll give you 20% or whatever the number was, right? Put it in a bank account in India. And they gave them great deals. And that was, the Silicon Valley was fun. So like my friends would suddenly get like $100,000 bonuses and then just put it in India. They just cash out free money, put it in India. India was paying them 20% or something. So it was good. But let's look at India. Okay, so I don't know if you can trade the rupee or something. What is it? INR, Indian rupee, and you're earning 8%. Let's say you're trading Forex or whatever. I don't know who trades rupee, but let's say you're leveraged 100 to 1 leverage, right? That means if you use $1,000 of your own money, right, and increased it to $100,000, and then you move it to India and earn 8%. You earn 8% on the $100,000, but you only have $1,000 invested. So at the end of 1 year, you've earned $800 in interest on your $1,000. Wait, I screwed that up, right? Is it 8%, 10%? Yeah, no, I screwed that up. There you go. Sorry. 10% of 100,000 is 10,000, so it was 8,000. Sorry, my bad. Boop, boop. Thank you, Highlander. Just a what? I bet you what? I can zip as what? Like, that just, does that like freak you out? Like, what the hell is what? What? India pays you 800% per year? Now, you think that's good? The real thing is, what might happen, or in many cases probably will happen, is that it will appreciate in terms of pips as well. So, going to the Turkish lira scenario, right? You might get a move like this, which is pro-Turkey. You sold it here, and you're collecting, let's say, 1,000%. You're laughing. I'm laughing. It sounds stupid, right? But you're earning 1,000% a year. It's actually significantly more than 1,000. I know, right? It's significantly more than 1,000 because you're leveraged 100 to 1. Okay, but whatever. So you're short here, and you're earning 1,000% per year, and the appreciation of lira. So you might make 1,000% a year plus 3,000% in appreciation because it fell so far, so hard. Who knows, right? So my point is you're making way more on the pips. Pips are big. This 1,000% is only bonus. Okay? Is that how swap banks make money? Yes. Yes. That's it. You just made money like a professional, whether you're a bank or a hedge fund. You just figured it out. Why would you scalp pound dollar for 20 pips when you can make a minimum 1,000% a year on your actual money? Now, your broker probably doesn't have rupee. There's some currency restrictions, right? Like buying rupee is not as easy as you think. Buying Brazilian real is not that easy to do. Lira is not that easy to do. So with Trader's Way, you get USD lira, you can get Euro lira. Euro lira pays great, right? But you don't have like lira yen, for example. These are, not major currencies, okay? But you could have a small part of your portfolio, right? Let's like ZAR, for example, is another one. What is ZAR paying these days, guys? Where's my South African brothers and sisters? What is South Africa paying these days? I don't even have ZAR on here. Weird. Must be on my other platform. I'll do it here. Maybe it's here. What is the interest rate in South Africa? South Africa. Let's do euros are just for fun. Well, no, this is a dollar. Oops. What did I just do? I clicked and I screwed something up. What did I do? I had euro. I just lost my. Oh, there it is. No, it's down here. Okay, cool. Let's do it this way. All right. But you wouldn't do it against this, right? You just wouldn't because of the dollar. All right, so let me go back. Let me do euro. You just wouldn't do it if you're... All right. Okay, so what's your business? Well, what you were supposed to do on the first day of the month was sell in here, right? Or the last day of last month. That's an easy front run. That's straight up easy front run. By the way, the target was here. So you knew, look, unfortunately, it was like the first week of the month you were supposed to take profit. So you did nothing this whole month, but you were profitable. But cool. So what if you're long-term short this? So now you're going to sell up here and you're going to take it down here. But the thing is, you're going to get paid, right? You have to pay Europe to borrow money from them. So let's say you're me and you have US dollars. I don't want to trade US dollars. I want to borrow euro. Why? It's free. So now I own a bunch of euro, and then I lend the euro to South Africa because it wants to borrow my euro. It needs foreign exchange. It needs foreign currency. So I lend South Africa, right? So I turn $1,000 into $100,000, and I buy $100,000 worth of euro, and then I lend South Africa $100,000 of euro, convert it to ZAR, to South African rand. It's convoluted, right? US dollars to euro, euro to ZAR, but that's how it all works. I owe European banks nothing because they gave me the money for free. I stuff it here, and South Africa says, thank you very much. We're going to pay you 6.75. Let's just say 6%. Okay? 6% on $100,000 is what? $6,000. How much money do I actually have in the pot? Remember, my $1,000 is only collateral. I put up $1,000 to borrow $100,000 to exchange that for euro, to exchange that for ZAR. I'm earning $6,000 a year on a $1,000 investment plus pips. Every pip you make, every pip you make, every pip. Yeah. Now you learn how to trade big money. That's what big money does. John Taylor was the guy that started the first hedge fund focused only on foreign exchange. This guy would make $250 million a year personally, and they hedged. They actually hedged. They made zero pips. He had, I think, hundreds of employees. It was a big firm. They had large institutional investors like the California Teachers Retirement Fund, that kind of stuff, right? Okay. Well, yeah, that is big money. Like, think about it. Like, what kind of professional with big money is pissing around with a 22 pip move on the pound dollar? Right? And then you're like, well, that doesn't make much money, so I need 500 to 1 leverage. What the are you talking about, son? Well, I need to turn my $22 into $100. Gee whiz, are you joking? Right? Like, you can see, this should be an alarm, right? Isn't $6,000 on a $1,000 investment? Doesn't that seem too high to you? You're like, well, I could have twice the stop loss. Think about it this way, guys. You cut your risk in half, so you only make $3,000 or $3,000 on a $1,000 investment, but you have half the risk. Are you okay? Are you okay with that? Because you're like, you know what, 300% is still a pretty high bond yield, right? And then you're like, well, snap. If I go to the bond market and buy a bond that pays 5%, I don't get any leverage. So if I could have if I made 50% a year on my money guaranteed, I'd be like one of the best traders in the world, right? So what if I made it 100%? I knew for a fact I was going to make 100% a year, and I don't have to do anything. I can make 100% on my money. So you cut your lot size in half. So then you cut it in half again, which means it's a quarter. That'd be right. So now you're taking 25% of your original risk. You've cut your risk by 75%. Okay? And cut it by 75%. And you're still making 150% return on investment on your money per year guaranteed. Plus pips. Right? And they're like, well, why would I need 500 to 1? Well, if you need 500 to 1 leverage, you don't know how to trade. You don't even know how to trade. You don't even get how the market works. A complete misunderstanding of reality. You're locked in the matrix. You're walking around and you see the pretty girl in a red dress and a yellow Lamborghini, and you're lost in a fake reality. If I get a yellow Lamborghini, then the girl in the red dress is going to love me. Uh-huh. I'm pretty sure you don't understand girls in red dresses either. So anyways, wake up call. Can you trade for yield? That's what Forex really was. The amazing thing is when the whole world went to zero interest rate policy, known as ZIRP, during the 2007 crisis, let's say about 2000 and now, it killed the carry. Okay? It killed the carry. There was a time in my life, and I did a video, and it's still on YouTube somewhere, and I remember for a couple of reasons. One of them is I bought a suit jacket that was supposed to be anti-wrinkle, and I thought, oh man, this is great. I'll buy this suit. I can wear it on the airplane and still walk around New York City and not look like a douchebag with a wrinkled jacket. And then I put it on, and you look at the video, I'm like, yeah, that's not a good jacket. So anyways. But I talked about at the time I was earning 850% a year on my NZD JPY. Plus pips. And here's the thing. At the end of the year, you might be up 800 pips. Or 1,500 pips, or 3,000 pips, right? And the icing on the cake was 850% a year. It was sickening. It was ridiculous. I miss it so much. Okay. Yeah, FX Pipper, and then you will blow up your trading account. You just will, and you'll lose the opportunity. And you'll say, oh, well, instead of 3,000%, maybe I could have been happy with 1,500%. And then you're like, well, actually, if I invested my retirement money in the stock market, I'd be happy with 20%. So it's funny to say, well, maybe I should settle for only 1,500% versus my 20%. It's so messed up. Well, Kevin says, will the carry trade come back? Well, it kind of has. What's the interest rates in Europe? 0. What's the interest rate in the United States? 2 something. Well, that's pretty good on 100 to 1. But what about lira? What about rand? Right? You have lira, you have rand, you have Mexican peso. Is that right? I don't know Alexander Elder, but the very, 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 very first book on trading, I don't actually think I read it. So, but my dad bought it. I'm like, hey, I ran into this foreign exchange thing. And anyways, he bought me Alexander's book, Come Into My Trading Room, I think. Unfortunately, I don't think I read it. I'm stubborn that way. But I do have it. Well, it's different. The dollar is the dollar is the dollar. So the dollar is a reserve currency. So the USD is unlike anything else on the planet, right? It's unique. There's nothing like it. The US dollar is equal to nothing. Okay? So like Japan buying oil from Malaysia does so in US dollars. You're like, what does that have to do with the US economy? Nothing. Business gets done. Lots of assets are priced in dollar because that's what it is. It's a reserve currency. So the dollar is different. So when things are good, the dollar is put into play, and the market is flooded with dollars, and the dollar gets weak, and all this kind of stuff, right? So don't confuse the dollar with like the pound, for example, or with the euro or with the yen. It's unique in of itself. Okay, but right now, if you were short and earning short euro dollar, not ZAR, euro dollar. If you're short euro dollar, and you'd earn a carry of 2% on your borrowed money. So if you're leveraged 100 to 1, you're going to make that 200%. You're going to make $2,000 a year in interest. Now you may find you don't earn the full carry. And you'll say, Wayne, I have a $500 mini account or micro account, and my broker, maybe it's Traders Way, they're not paying me the full 2%. You're like, well, dude, first of all, read your trader agreement or whatever, terms of service. If you have a mini account or a micro account, there's so little. You're paying so little. You're trading and paying, 10 cents or something, right? That for a broker to just cover its costs, since you're such a small trader, they do things like they either charge you carry, even though you might deserve to own it or earn it, or they don't pay you the full carry because, they're looking at how to cover their costs. And they say, okay, we got 10,000 mini traders. Well, 10,000, and then you collect interest on that, helps pay the bills because, dude, what are you going to earn? Right? You're going to earn 200% on your $2, right? There's no money in it. But when you have big money or bigger money, or at least even a standard, right? When I started, there wasn't even mini accounts, right? So anyways, if you have a standard account, or even better, a VIP account where you have big money, you're going to earn the full carry for sure. And it's going to be a big part of what you do. Okay. And one day I do believe we will get closer to the old days, but there may be a reality in which interest rates never come back. Okay. That it's a consequence. Like, people are scratching their head like, how come interest rates are so low, and how come we can't get inflation? This is what happens with capitalism and free trade. Capitalism and free trade will lower things like inflation. So when the world is working properly, right, there's no inflation. So where are places with no inflation? Europe has no inflation. The United States has no inflation. Canada has no inflation. Australia has no inflation. New Zealand has no inflation. Japan has no inflation. So where do you get inflation? Everywhere that's not working. And what I've been saying for many years is these countries, the OECD countries, are essentially exporting their inflation. So we may never come back unless you're, like, if you have high inflation now, you're probably always going to have a high inflation. And it's just sort of like, it's a consequence of what your economy does and how it plays in the global market and all that kind of stuff. So South Africa is probably going to have inflation for the unforeseeable future. But the United States might be like Japan. 25 years from now, we may still have low inflation. It's very, very, very possible. Yeah, so Forex Pipper says, wipe us the account if you don't increase your lot size, keeping the same. Yes. Therefore, you're not using the leverage, so it's the same thing, right? It's the same thing. Okay, it's the same thing. So if you have 300 to 1 or 200 to 1 leverage, but you're still just using mini lots on your $10,000 trading account, yeah, you're not using the leverage. So it's almost like you have a line of equity line of credit from your bank. It's an off balance sheet sort of thing where you have an equity line and they're like, you can go spend this $200,000 whenever you want. You're like, that's cool, but you never use it. You don't go out and build a swimming pool, for example. You could. You have the leverage, but you don't use it. That's fine. But then you haven't taken the risk. Okay? But what you might find, and again, look at your terms of service and talk to your broker and all that kind of stuff, right? But if you call up Traders Way and you're like, hey, I want to put $50,000 into an account, okay? And I would like to earn high yield. I want to earn full yield on my currencies so that I can carry trade. Okay? Call them up, talk to them, negotiate, see what happens. I don't know. I would do that with everyone. Okay? But if you're like, dude, I have $500, or what I've been hearing recently from some people are like, what's the absolute minimum I can deposit? Like, hey, I have $5. Will you give me 200 to 1 leverage? Or will you give me full carry? They're like, no. Because every time you make a trade, we earn what? 0.25 of a penny, right? So no, broker's got to earn money somehow, son. Okay, but you say, hey, I want to put 50 grand in, and I'm interested in carry trading, so I want to earn a full yield. Will he give it to me? Talk to them. They might say yes. I don't know. Yeah, 22 and a quarter, right? Kev says, I really love Forex, don't you? Well, there's lots, right? So the leverage is good if you use it properly. Okay. I like how it works in you leverage, and then yield. I love that. Okay. Or carry. I love that it's any market. Bullish or bearish, bearish and bullish, all of that kind of stuff. And in the United States, taxes. Forex is awesome tax-wise. Awesome. Okay? Awesome. So there's lots of advantages, for sure. And costs, actually. Costs are very low. Why are costs low in Forex? because, right, there's two things that really, well, I guess it's the same thing. You have well, let's put down here liquid. Okay, Forex is liquid, costs are low. Give me an example of an illiquid investment. What's the most common illiquid? Is it two L's? Illiquid, yeah. What's the most illiquid investment you think that's super common? That even the average Joe might invest into this illiquid asset. Real estate, thank you. So that person that comes in and says, don't you just love the light in this house? And aren't these closets just fabulous? Look at all the room. What do you got to pay that dummy? What do you have to pay that dummy that says, oh, I can just see your kids running through the yard? What does that dummy have to pay? What do you have to pay that person? What do you pay a real estate broker? Six frickin' percent? Then what? Are there costs? Origination and whatever, these other fees and other fees and other fees. It's just sick, right? To buy this illiquid asset, you're going to have these ridiculous, it's going to cost you what, 8, 9, 10%? Your closing costs and all this crap. Why? It's illiquid. Okay? Cost you 10%. On $1 million investment, you have $100,000 in expenses on a $1 million investment. You're like, what? Just to get in. And then what? You might have a mortgage, and now you got to pay 6%, or I guess if you borrowed $800,000, now you got to have a jumbo, right? So you're paying what, 8% a year annualized. So over the course of the life of your 30-year mortgage, you're going to pay 172% interest. Right? It's going to cost you almost $3 million for your stupid house. Anyways, it's illiquid. Forex, fabulously cheap because it's liquid. There's no risk. That's why you get 100 to 1, 200 to 1, 500 to 1 leverage. Why? It's liquid. Right? You're like, oh, but Wayne, I have to pay $22 to borrow $100,000. Oops. Sorry. Cost me $22 to borrow $100,000. Don't cry for me, Argentina. So you jack that up. It costs you $222 to borrow $1 million versus $100,000, right? Plus 8% a year. Holy crap, right? To buy $100,000 or to buy $1 million asset. You're like, oh my God, you're kidding me. Right? So $222 per million sounds like a pretty decent deal. And then you're like, yeah, I think I want to go to cash. I want to sell this asset. So you're, boom, you sell it. 1 second later, it's sold. 1 second later, money in the bank. What if you decide, I want to sell my $1 million house now? I'm sick of the 8%. I want to sell the $1 million. How long does that take? Right? How long does that take? You're like, I want to dump this $1 million thing, and carrying cost is ridiculous, and I have to buy insurance on it, and I have to mow the lawn, and I have to rent it out, and my tenants are psychopaths, and I have to do credit history reports, and oh my God. Forex is awesome. Yeah, well, Kevin says it might, in California, it might be a few days. Sure. And then any profit you made on it because you live in California, 9%. I was paying 9.25%, I think it was. 9% state tax. And then they're going to charge you, what, 40%. So look, almost half your profit's gone in taxes. I had taxes as one of the reasons Forex is awesome. The treatment of Forex is so much better than you flipping real estate because the government is just smart enough to understand that if you're in the business of buying and selling money, that money is your product, money is your service. You need money for inventory, and it's advantageous to be a Forex trader. Oh, your taxes are ridiculously lower. It's so awesome. So anyways, yeah. I think the trick with real estate is A, get your license so you don't have to pay some idiot that kind of money. And then B, never sell. Never sell. Anyways, but that's up to you. All right, well, thank you for your time today. I'll see you guys tomorrow. Make sure you thank Traders Way by visiting Traders Way, opening up an account. Download MT4, come back here, download my charts, install them. Your charts look like my charts. Everybody's happy. Please give me a like. Please give me a like. Please give me a like, thumbs up, or whatever you want to call it, and leave a comment. Just say, hey, thanks, Wayne, or wasabi. But leave a comment. Okay? And I will see you guys tomorrow and the next day and the next day and all that kind of stuff. Remember, we have Japan making an interest rate decision on Thursday. We got like home stuff, existing home sales, and all that kind of stuff this week. Should be all right. Should be an all right week. I'll see you tomorrow, guys. Cheers. Oh, turn that off. All right. See you tomorrow.